Been telling you guys since I joined the channel that the Bitcoin is in a downtrend, and we've been in this downtrend since the months of March. But I also told you multiple times my target for the end of the year is roughly around 82. That means this downtrend is gonna be broken. And that's the reason why we actually went long on both Bitcoin and Ethereum last week, and so far our longs are printing. So if you want to see what other plays I gonna do and how I gonna pick up my other plays, including altcoins, let's start. Good morning, good afternoon, everyone. My name is Russ. For those who missed me, as you see, guys, I am back to my studio, and today we're gonna go and have a dedicated crypto video. In today's video, we first, of course, gonna cover the behavior of Bitcoin, and then go into Ethereum and cover other alts. And I think it will be more important also not just to give you a couple of setups as I normally do every week when we have the good ones, but also give you my reasoning and my thinking and my logic behind picking up the particular plays. That's not gonna, of course, be done in one video, otherwise it will be too easy, but we're gonna have several educational videos, after which I believe you will be able to make your aware decisions and conclusions by yourself. You know, I never ask for those things in my videos, but that's the time, so please give me the like and comment in a section down below if you appreciate me sharing the knowledge. It helps at the end of the day, and yeah, I see a lot of people just drawing Toblerones, triangles on the chart and getting so many likes. That's unfortunately saddening because they actually don't teach you anything. They just, push their bias, which is completely unaware. In any case, let's start. First of all, as you remember, we've been analyzing Bitcoin from the market structure perspective, and I've been telling you guys there is a high potential that this low might be the first low when we're gonna start seeing a reversal. And the series of lower highs that we had since the beginning, since I joined the channel in March. That's why I was telling you in March, there's no need to chase Bitcoin just yet unless you're a scalper. We're gonna get the better price to enter. And it's also the reason why we entered at 60K, and it's also the reason why I believe that this time is different, and this time we actually might break from our downtrend. Why? Because we start to print the series of higher low, and our first higher high was forming here on the 26th of September. And what happened on 26th of September? Let's see in the Telegram group. That's actually the message from the 26th of September, as you can see. And that's the real reason I highlighted this 26th of September here on the trading view. So let's see what I wrote. I told you guys, everyone was really bullish. Everyone was longing the 65 top. And I was telling you, for a real bull to begin in crypto, you should first wait for a break above 65,000, followed by a retest of 61 with a quick surge back to 65, 66 acceptance, another retest of 65, and then targeting 67. And then, only then, we are gonna be speaking about Bitcoin rallying to 74. And why 74? Well, because 74 is Bitcoin taking all those stop losses, all the stop losses of all the people shorting the local tops and grabbing the liquidity from there. So let's put the 74 here on the chart, where we're gonna be at some point quite soon, sooner than later. And let's see once again what happened since I wrote this message. So I'm just projecting it here again, because that actually worked out quite accurately. Break above 65, retest of 61, quick surge back to 65, then 66, retest of 65, and then 67. This is exactly pretty much what happened from this blue line on the chart, the spike. So we broke above 65, then we retested 61. Actually, we retested even 60 to scare everyone out. And then those people who went long here, we swiped them once again. And this is the time when I realized the spot interest is here, and that's exactly when we entered our long that I just showed you a few minutes ago. So with a quick surge back above 65, that what has happened here, 66, and then another retest of 65. This is this week. This is this week of yesterday. We retested 65 again, and then we targeted 67. So it really played in a way by playbook. How did I know? Well, I spent dozens of thousands of hours in this market, so sometimes I understand a bit the market maker's logic, because that's just purely the pendulum between greed and fear, and that's exactly what brings an open interest into the market, and that's exactly what stimulates market maker model of actually making money. Well, now I believe that, as I said, this time is different, and Bitcoin is actually able, due to the fact that in poly market you can see that Trump is leading significantly ahead of Harris. I think that also propels Bitcoin because, as you know, we're gonna keep the political discussions aside right now, but Trump administration is much more friendly towards blockchain, towards cryptocurrencies overall when it comes to legislation and regulation. So I guess that's also one of the reasons, but of course, I don't put so much attention in there. We discussed together with you guys. For those who've been watching my videos, you know my macro outlook, you know that inflation risks are percolating, you know that inflation is not tamed. Whatever Jerome Powell is saying, this is not true by a large degree. And of course, Bitcoin as the hedge against inflation, and many other reasons why institutional money are flowing in there. This is not a surprise that at some point, as I told you like this half a year ago, 82 will be my target for this year. I think quite realistic. So now we're gonna see, okay, the 74,000 first target. So first target 74, and then once we start accepting there, I believe 82 will be the continuation towards our Christmas. Maybe we're gonna do a little blow off top, maybe we even gonna end up at 88, but I think 82 is much more humble and realistic target. Now the question is, what should you play in here? Because looking at Bitcoin dominance chart, it does not give me a very good signal just yet to go full on alts. Well, because Bitcoin dominance might be printing the last higher high here. Why the last? Well, because as you remember, also for those who watch my videos, that will be my zone of reversal. I don't expect Bitcoin to go actually above 60% in terms of Bitcoin dominance, but it is still a little bit too risky. I am, of course, more confident as a trader. I'm not recommending you to consider that this is the top, because I would normally always go on a lower term time frames, and I would start seeing the break of market structure here, but there is no break either. Like you see, even in 1 hour chart, even in 4 hour chart, it is still increasing here. So I don't think that this is like the time yet to go full in on alts, because when we see those kind of regimes, when BTC dominance is still going up, and at the same time Bitcoin price nukes for a little bit, and I can tell you that there is a high probability that Bitcoin itself can definitely correct here. Well, because I see multiple divergences printing on Bitcoin, and that's okay. You can see that my divergence indicator is pointing out 6 out of 8 possible divergences, including the OBV divergence, which is the most important for me, and as well as RSI divergence. For those who doesn't remember what OBV is, just to give you a quick reminder, this is the form of extended or advanced volume indicator. Just instead of showing you always volume, just like as a bar, it is calculated by adding the day's volume to a cumulative total when the security price closes up. So if our candle on that day would have been green, then the volume will be added. But if our candle would be red, it's subtracting the day's volume when the security price closes down. So that's why OBV is a very important indicator, because it actually shows like a vector or desire in respect to the particular volume of transaction. At the same time, obviously, no one owns you anything, including that divergence. The fact is that we are above the Monday high, and we're gonna accept here, burn our RSI a little bit, maybe consolidate for a day or two. Also, guys, considering the fact that ETF inflows are multi-billion right now per day, Nick would cover those topics more in details rather than myself, but just the fact that we are accepting above this high, maybe burn our RSI for a few days, and then we can just simply shoot up from here. That's the reason why in my Telegram group we started a second trade. You can see it on your screens right now. So we basically went into the continuation trade from 65, and that's okay. Sometimes when you miss the beginning, the momentum is strong, you can also add up. And this is what I'm always saying, majority of people are getting it wrong. They are cutting the winners and they're adding up into the losers. Normally when the momentum is strong, and Bitcoin is a commodity, and commodities are driven really by momentum. You've seen it in lumber, you've seen it in gold, you've seen it in many other commodities that we're gonna build our big positions, including potash, including molybdenum, including lithium. So yeah, when momentum is strong in commodities, commodities are moving very fast, and Bitcoin is a commodity. So it's okay to re-enter, or if you entered from 60 together with me, it's also okay to either create a second position on an isolated account, or even to add to existing positions wherever the trading style is suiting you more. What I don't like, however, is that lack of spot interest in Bitcoin across all the exchanges. And the fact that we have been sustaining our price movements upwards pretty much just by perpetuals, despite funding is getting more negative right now. So I also see that this particular raise in open interest, it may be the early shorts. So we might even have 1 week up to take all those highs, especially if DXY is going to correct down from here. And then I think we might also want to take all those poor lows. So in my opinion, it will still be a chance to add around 64,000. Maybe we're gonna even tap into this fair value gap somewhere at 63.5, which I cannot guarantee, but just simply following my logic, looking at the chart, seeing the blue line, the spot cumulative volume delta is going down. It is looking like a bit of a distribution for me. And taking into account how strong is Bitcoin dominance, I am asking you to be a little bit more cautious here and not just to ape long anything, including altcoins, because you know what happens when Bitcoin dominance at 69% and then Bitcoin suddenly pukes $1,000 or $2,000 to liquidate all this open interest where people went long. They didn't go long from 60,000, they went long at 66 because they thought, oh my God, we're going to 100K. You understand that this space has a lot of very immature traders, and that's why market making is actually a never-ending ATM. So altcoins are gonna drop significantly more because Bitcoin dominance is still in an uptrend. Now looking into Ethereum to Bitcoin relative chart, of course, you remember I've been saying I'd love this chart to bottom. I think we all would love this chart to bottom because that would be the beginning of a real alt season. Not just like 3% here, 4% there, but really fun starting across the board, not just in a selected meme coins or a couple of AI coins. So I want that low to hold and to W formation to start. But looking how this chart developed in the last few days, you know, if we would have this green vector candle confirmed, and then we would start printing 3 white soldiers, for example, and then we will actually start accepting above our 50-day exponential moving average, you know, getting into this purple cloud around it, then I would say, true, my plan is going well. But we had this red engulfing candle, and now we are still consolidating around our support, our last week support. And what do I see, guys, when I'm looking on those kind of charts? And I want you to see it together with me. I see a bunch of unprotected lows. And normally what happens in this case, we need to swipe one more time to get all these people out of their position, and only then we would continue. So I would say that even swiping this low can be very possible. I would think it actually gonna happen in the next coming 10 days. So I would convert my Bitcoin into Ethereum once this swipe happens and once we accept above, and we can start the move here. For now, as I said, also looking at Ethereum dominance chart, you know, it's trying to print this bottom. We see how many divergences have been printed here, but I think it is yet quite early to conclude. I think one more swipe is needed, if you want my Ethereum opinion. With the same going for silver, in the grand scheme of things, it is not that important if you're actually heading towards $38 or $40 from 30.5 or from 31.5. You want to be in this move. And similar thing applies to Bitcoin. Why? Because I believe that US 10-year yields are about to top, and the DXY is doing its last spike and actually topping maybe as of today or tomorrow. So you want to be allocated in Bitcoin. And for those reasons, I'm showing you how I am personally approaching it. You see I'm in a tiny short here just to hedge my spot positions, but overall what I'm doing, I'm going here on Till Street, which is integrated to my Bybit account. So I'm adding, you see I already have the smaller bids here, but I would like to say I'm bidding here 63,000, as I told you, all the way to, let's say, 65,000 to add to my position another $100,000 split between 20 orders. So it's more precise. Let's preview how they're gonna look like. I click submit, and then I'm done within 1 second. So if you are hesitant around your position, in the same way some people are hesitant, for example, around their maker position because they went all in at 1,500 and then it slightly goes down to 1,350 and they're worried, then don't do that. Just scale between 1,200 and 1,500. So your average entry will be at 1,350 and you are not worried that you're underwater. guys, it's like simple hint, it's free. I am putting the link in the description down below if you want to register and Bybit, because in my opinion, it's honestly the best UI, UX, and fees available right now in the world. For many reasons, I showcased why I'm not gonna go there right now, but you basically can do stop loss and take profit also on your spot position. And some people saying, oh, do you like preaching trading derivatives? I'm like, guys, I don't care at the end of the day what do you trade, as soon as you practice risk management, as soon as you cannot lose more than 2.5% from one trade. Doesn't really matter how your trade is structured. At the end of the day, it's the same. I mean, I am simply using derivatives here because I can split my order, for example, between 20 different entries. But it doesn't mean that I'm telling you to go all in without any DCA, buy something on 20x leverage and pray for those to go higher. This is not how I act. This is not what I preach. So yeah, it's very important, because some people are saying, oh, those are derivatives. Derivatives are risky. No, if you're smart, like nothing is risky. So you just know what you do. Well, yeah, with all that said, I keep a link in the description down below. They give you 500 USDT trade for free. There's some people in our group that just used the trade, put $100 there, made it to 600. That's the real message I read last week. So yeah, I think if you act smart, if you follow my recommendation, if you watch my videos about risk management, also the wisdom that I've been sharing regarding Dr. Alex Erda, trading for living. If you missed this video, please come back and watch. It covers all those topics. So let's not demonize trading, because it's also a way for many people from their 9 to 5, and I'm very happy if they're taking this journey. Why? Because people saying, oh, but trading is a zero-sum game. No, guys, it's not a zero-sum game. We're gonna cover it in a separate video, because it's gonna tell us a little bit longer today. Now let's go to alts. First of all, the funding looks quite healthy here as of now. I'm enjoying more looking on the yearly, because it's more representative. Of course, Doge has spiked, and that's like around 10, sometimes 20% across different exchanges. You see, for example, on decentralized exchange like DYDX, it's even 40%. Many DGens are trying to long it right now. But normally for other alts, it's quite healthy. Like having something around 10% a year, it's okay, because it's not much higher that the interest rate that we're having right now in a financial system. So I'm coming back to currents, and you see, yeah, those are quite a healthy values. 0.01 will be the standard across most of the exchanges, and it actually means that it costs you 0.01% more expensive per 8 hours to have your position comparing to buying spot. Yeah, but you also buy derivatives very often cheaper, because your acquisition price is cheaper. Your spot trading fees are more expensive. So it all depends, of course, on the time frame, but overall funding looks okay to me. Now, when I'm going to the trading view, I see this is super important chart also that I want you to start your day with. This is USDT dominance. And this is not the first time you're seeing this chart. For people who watch me, you remember there's 5.37 line or 5.3. To make it simpler, let's maybe put it as a rectangle, like everything between those zone is the zone of support or resistance. I like to use the word supply and demand. So this is our demand. This is our demand for USDT. And if we are accepting below our demand, we know that there is no demand for USDT. And look at this chart, look where we've been. And we're starting really breaking from those multi-month head and shoulders pattern. And if we start going down, that I guess our next target would be roughly around 4.65. And this is a huge move that would signify a very interesting uptrend in altcoins. And so altcoins themselves can start front running that behavior of Ethereum to Bitcoin, because Ethereum might be the lagging one, and some alts are going to have much more fun than Ethereum itself. And coming to altcoins, purely looking at the charts, if you want to ride and have a nice momentum here, you can have, as always, as I said, two approaches. If you are a long-term holder, you only want to be allocated in quality L1s, you want to risk less, so your portfolio size is higher. For example, you're having 7-digit portfolio, so you don't want to touch memes, because yeah, you cannot just simply track, for example, 70 coins, but you also don't want to put, let's say, $50,000 in one meme coin. That probably would be your strategy, and you trying to buy the low, and you're looking for a quality projects, L1s and so. And I think that's going to be more of the viewers, because I had a quiz. I asked what's your average portfolio size in a group, and I think majority of people are not trading millions. They're trading something around let's say $50,000, just an average, of course, can be more, can be less. But in this case, your approach is different. I, at your place, would actually chase momentum. So what I propose you is to use the simple methodology that I recommend. First of all, you find an altcoin that is breaking out already, has broken out of its summer range. So does it look like the dot has broken out of the summer range? No, because you see still we are like consolidating. We are multiple reasons here. The VCs are selling that entered at a few cents, or there is just a lot of old back holders that are traumatized. They're prices suppressed, and so on and so forth. So we're not going to go into the details why price doesn't develop. It's just simply enough to analyze that the price is not breaking from this range. For example, if you look on Atom, it's just a random example, guys. I'm showing you. It's the same situation here, right? It's the same situation. We're in the range. We swipe this range. Probably we're gonna accept at some point here above 50-day moving average. Maybe we're gonna come to the top of the range, do something like that. So what can happen with you? It's a good entry. But if we enter really right now a Q4, an altcoin season, and then you're gonna wait for another 50 days for this altcoin just to actually start moving, 11%, maybe 16%, that's not benefiting the overall performance of your portfolio. So what I'm recommending you to do, look for altcoins that have broken out already of this range. For example, when you look at Fed, it's a completely different system, it's a completely different outlook, because you see that we had this range, we lost this range, and we accepted back into this range, and now we've broken off this range. So Fed, for example, is going to be an altcoin that is already acting very different comparing to the previous two. And this is our setup that I start from there. Now you're gonna look, okay, is it looking good to me? Do I want to add now? It actually looks not bad because it kind of holds above those highs. But based on everything we discussed about Bitcoin dominance, BTCD, based on everything we discussed with the Bitcoin volume, cumulative volume delta, and so on and so forth, we might have a little dump in there. So we can actually come and swipe those lows. So what I would do, I would actually enter here rather than just entering at the market. Then I would open this OBV chart, which I just represented to you. It's just OBV chart for Fed, for Fetch.io. So yeah, as you see, it's a part of my indicators. Then I just go here and I click on it. It becomes big because it's easier to chart like that. And it goes all the way into March. So you see, this is the break and now the retest. And I would like this OBV to actually bounce here, close above this previous low, just to signify what we like to see, our market structure break. And then at this point, I'm coming back to Fed.io price chart. And at this point, I would be able to add more because it will give me the confidence that there is actually the momentum, there is desire from the crowd to own it. Let's make it a little bit more clean. Yeah, so it's okay for me to add entry one here, or if you want to use Steel Street everywhere between, let's say, here and here, just not to be completely sidelined. If you start seeing that we bounce here, we swiped, but we start bleeding down, then you just cut it. And in this case, your cut will be smaller because your average entry is smaller, is lower. So you just cut like 5% instead of 15%. But your upside is significantly higher. And if you see that OBV is breaking out, retesting and creating this high, it's okay to add. Either it's going to be here or here. You're adding your position. And then, for example, we're also breaking out of this downtrend. So Fed is doing something like that. So you can add here too. It is also reasonable to add when the price is breaking down from this downtrend, especially if the volume is good. But yeah, if it's going to be a positive move and a positive green candle, then obviously it's probably also going to be a good volume, but still check the volume. And then yeah, I would be targeting first of all those highs. That's 25%, so risk 5%, reward 25%, and then I will be targeting those highs, which is 73%. And guys, if I'm going in a weekly, we can also go and take out the all-time highs, which is gonna be 130, 140%, something like that. So you understand my logic. It's very important that I don't need to give you every setup on earth. You can come and share your setups in a discussion group. We have more than 1,000 people sharing their setups in the discussion group. And so at the end of the day, of course, I don't also want you to put all your money in one alt. And so that's why it's also healthy to help each other finding other setups as well.